Hey guys, hope you guys had a good weekend. Today I'm going to be going over the trade that I took on the 12th of January 2026. As you read by the title already, this was a losing day, but I'm totally fine with that. This was an A plus setup according to my strategy, and I'll take this any day of the week. I want you guys to realize there's a lot of people out there that don't show their losses and only show their wins, and I want to show like the true side of trading where every strategy has losing days. Like no strategy out there has 100% win rate, and just because you lose one day or you lose for a couple of days, that doesn't mean you're unprofitable. That doesn't mean you won't make money. That shouldn't put you down. It's just part of the process. It's the people that can look past these losing days and continue trading that actually make some money and not act off emotion. So I'm gonna go over why I thought this was an A plus setup, and I'll still take this even though I know it's a losing trade. So let's start off with the 4 hour time frame, and let me load up the replay tool. So going into the day, my bias was a bit neutral. Like I didn't really know where price wanted to go, because on the 4 hour time frame we broke above this high and left relatively equal highs on the Friday. But the problem is, as we set this high, we also invest on the 4 hourly, so that makes me think we might be coming down for all these lows down here. And we have this 4 hour time frame fair value gap sitting down here as well that I really like. I really want us to come fill this because we have a high sitting right above it. If I can draw it out right here. So I wouldn't be too upset if we were bearish, but at the same time we might also be bullish because we had a body close above this and we have equal high, or like relatively equal highs up here. So what do I do when I don't really know what's going on with my bias? What I like to do is I like to set a condition. So if we drop down one time frame, as you can see, we have a few hourly fair value gaps. If I check all the hourly fair value gaps in discount, so above this 50% zone, we have this one and we have this one. So what I would do is I would wait for 10 a.m. close, and on 10 a.m. close I can see how price is respecting or disrespecting these fair value gaps. If we are bearish, let me just get rid of all of this. If we are bearish, we would respect this gap and come down, or we would just start dumping down straight away from here. However, if we're bullish, I can expect body closes above these fair value gaps because price is not respecting them. So if I play the next hourly candle, I think it's this one or this one. Where's New York open? Sorry. There we go. So this is 10 a.m. close. As you can see, we had extremely strong body close over this hourly fair value gap. You do need to be careful because the hourly close did not body close above this fair value gap, so we could reverse from it. But I'll show you how to like trade around that. So hourly is super bullish. Then we drop down to the 15-minute. As you can see, the 15-minute has really strong bullish structure as well. So we are forming 15-minute fair value gaps. We're breaking above these highs. We've got really good draw up here. At this point, I definitely just want to be looking for longs. So if I try drawing out what I can see, I like this low down here, but obviously we're not going to come for that. We're clearly pushing up here. If I drop down to the 15-minute, I really like this 15-minute gap that we could continue up from. So I think we did come down into this gap, but I didn't take the trade, and I'll show you why. So 15-minute fair value gap. All right, let me play price action. As you can see, price was really dry. Price did not want to do anything. I'm going to delete this actually. So we had no fair value gaps forming, absolutely nothing. I think around this time we formed this 30-minute fair value gap as well. So you want to keep checking the high time frames, because as you're going through the session, you need to keep drawing the new fair value gaps that are forming, so you don't miss out on any play. So as you can see, we just tapped into here, but if you didn't draw this new fair value gap, you would have missed it. So as you can see, when we do tap into it right here, it looks really good. We have the sweep, we have the high time frame zone, but we don't have the inverse fair value gap, so I wouldn't enter here. Same with the 2-minute, 3-minute, 5-minute, absolutely nothing to enter off. And sadly, we did end up going straight towards my draws right here, so I would have probably TP'd here and up here. So this would have been a clean trade. If there was an inverse, I would have definitely entered this, but that's the reason I stayed out of this trade. If I continue playing price action, as you can see, this high right here, we literally formed equal highs. We didn't sweep it. So usually whenever this happens, I just hope price stays over here until this 15-minute close. And then I want to long out of this 15-minute fair value gap, which was my trade today. So this is usually an extremely high probability trade, because not only are we super bullish by breaking above these highs, we also have equal highs up here. So in my head, like 80% of the times or 90% of the times, we're going to come hit all of these white lines, so these highs that I've drawn out. My job is just to try getting a small slice of the cake, just catch a small move up. So what I was doing is, when I saw this happen, I was like, all right, hopefully we come into this 15-minute fair value gap and I get an entry. So we did end up coming down into this 15-minute fair value gap. I want to see this sweep right here. Right here. Okay, so I skipped a bit too far, but let me explain. So we come over here, sweep this low, and then we don't really have that nice of a fair value gap over here, but we do have this very slim fair value gap right here. The reason I really like this trade anyway is because, as you can see, it took us 1, 2, 3, 4, 5 candles to come down into this fair value gap, and we had almost the same amount of movement up in one candle. That shows crazy displacement and crazy momentum that price does want to go up. So what I decided to do is I decided to enter a long position right here, targeting these equal highs for a 1-2-1. But as you can see, literally I got stopped out within 30 seconds. I didn't even get a chance to place my stop loss down. I had to manually close. So yeah, nothing much I can do, and it was quite upsetting because, as you can see, the next few candles literally smashed my take profit. So that would have been another winning day for me, but what can you do? This is what I've back tested. This is what I know that works. You do have days where it doesn't work, and that's just part of the game. Like, you need to realize trading is a game of probability. You need to know the win rate on your strategy. So if your strategy is a 70% win rate, you have to lose those 30% of the times for your strategy to work. So out of 10 trades, you need to be winning 7 if it's 70% and losing 3. This is just one of my losing trades, and I'm fine with that. Even after taking this loss, I'm still up on the month like $700 per account. So I'm not stressed. And like, one way I like to think about taking losses in trading is, whenever you get paid your salary at the end of the month, you get the money in one lump payment. So you see £2,000, £3,000, £4,000, whatever it is. You don't start calculating how much you've made every single day, because your job doesn't pay you every single day, does it? So you should look at trading the same way. So you should look at your P&L at the end of the month. You shouldn't determine how much you won or lost on one day and like be like, all right, I'm not profitable anymore. Like, at the end of the month, if you're still in the red, or at the end of 2 months, every quarter, every 6 months, if you're still in the red, that's when it's a bit of a problem. That's when you need to start looking into your strategy. But just because I took this loss, I won't start back testing again. I won't start doubting my strategy. I won't be like, I must be doing something wrong. From what I can see, there's nothing that I could do wrong, that I did wrong right here. Like, I followed my strategy. I waited for the high time frame PD array. I waited for the 1 minute inverse. I made sure I checked the 2 minute, there was nothing there. 3 minute, there was nothing there. I had a good break-even point. I had a good risk to reward ratio. I already journaled this. Like, this is just an A+ trade that lost, and I'm totally fine with that. But tomorrow we do have CPI coming, so we should see good volume. I am going to be full putting some evals on CPI because I need to get some more accounts under my belt, but I will be trading normally after 9:30 on my funded account, so hopefully I get another trade in. But yeah, like, I just wanted to make this video to show transparency, that trading isn't always about winning, amazing, guessing price, seeing where it goes. You can be wrong sometimes, or you're meant to be wrong sometimes, and at the same time, you're not meant to know where price is going all the time. Like, at the beginning of the session, I didn't know if we were going to pump or dump, but I did say if we inverse this hourly, it's highly probable that we'll continue pumping, and it's making sure that you get that right. So when you do enter a trade, when you do know where draw is, where direction is, you are at least heading the right direction, if that makes sense. But yeah, anyway, I might record me full putting CPI because I think that's quite funny. I've never done it before. I just want to pass some evals. I wouldn't do that on my funded accounts, so I would not recommend you guys to do that unless you're just trying to pass some evals. But yeah, if there is a trade, I'll drop a trade recap tomorrow. But other than that, I'll catch you guys later. Take care.